Oil prices have been on a roller coaster as the fighting between the U.S. and Iran continues to impact global markets. Crude prices dropped sharply Monday, though, after signs of a possible pause in the conflict. But it doesn't mean lower prices at the pump right away. Michael Yoshida explains why drivers may have to wait a little bit for some relief.
Oil prices tumbled Monday, and one of the biggest single-day drops since late May.
We're really experiencing kind of the oil market roller coaster ride of 2026.
For months, oil markets have used any sign of good news as a reason for prices to fall. Optimism that's kept crude oil prices from soaring. The recent ceasefire also helped, allowing hundreds of millions of barrels to escape the Strait of Hormuz. But shipping traffic has again slowed to a trickle, and the market's resilience may be starting to fade.
In the last couple of weeks, the fighting flared again. We saw oil prices above $100 a barrel last week, and that's an indication that inventories are becoming very tight, and the market has these concerns.
The big question now, if the conflict continues, how long can stockpiles keep demand low? China has been leaning on reserves built up before the war. The U.S. and other countries have tapped emergency supplies too.
We can keep it up for a matter of a few more months, but as those inventories drain, that means that the cushion for a future oil market supply disruption is very thin.
So if demand picks back up while supplies remain tight, drivers could be in for a rough end to the summer. As of Monday, AAA says regular gas averaged $4.11 a gallon nationwide, up 23 cents from a month ago and more than $1 higher than before the war.
Americans probably, at least for now, may not see much of a drop in gasoline prices because while oil is dropping significantly, it's only the cost of oil dropping, whereas gasoline and diesel fuel not seeing much of a drop yet.
I'm Michael Yoshida reporting.